You reached out to me a couple days ago and said that you were watching things deteriorate even further as it pertains to delinquencies. What are you seeing out there?
Obviously, they lifted the FHA guardrails October 1st. You really won't see any fruit from that. And when I say fruit, I mean foreclosed properties that actually come through the system, probably till late next year. I've been saying it, though, for a while. The gig is going to be up.
John, what do you tell people that are in their home right now? Maybe they're struggling paying. They know that the end is coming near. Maybe they got another 6 or 7 months.
If you're struggling to pay it now, it's not going to get better. I mean, I had somebody call me. She goes, yeah, well, what can you do for me? I go, well, help you get out of there and save some of your equity. She's like, well, I don't want to move. I'm like, well, go back to your servicer. She's like, well, they're not working with me anymore. It's like, there are no other options there. Get what you can, get the meat off the bones and get the hell out of there. And that's kind of the environment we've created, is that, well, you don't have to move. We'll work this out. You can stay there and not pay. That's why when we go to evict people, they're like, this is BS. We've created this monster, but you're going to have one of these cycles. They're going to fall apart hard, and it's going to affect all the rest of it.
Let's talk about fraud. John Hoffman back again on our show to talk about what's happening with delinquencies and foreclosures. So, John, welcome back.
What's going on, Todd? How are you, man? Good to see you.
Good to see you as always,
Happy
my friends.
winter.
Happy winter.
It's here now, that's for sure.
It's kind of yucky out.
Oh, yeah.
So I know you reached out to me a couple days ago and said that you were watching things deteriorate even further as it pertains to delinquencies, of course.
Oh, yeah.
We've had you on the show several times. Anybody can go back and look at our prior videos, but John is a foreclosure expert. I mean, he's a broker in Illinois, and he's been dealing with bank-owned and foreclosure properties as his specialty dating back during the GFC. He went through that whole process. So,
right.
John, why don't you kind of just take it away and tell us what are you seeing out there?
Well, I mean, obviously they lifted the FHA guardrails October 1st, but you really won't see any fruit from that. And when I say fruit, I mean foreclosed properties that actually come through the system, probably till late next year. I've been saying that, though, for a while, because most of these people have one workout still after October 1st, and you bet your hide they're going to use it, and that's going to buy them 6 to 12 months. So, but the gig is going to be up. I mean, I'd sent you some stats about the research I've been doing on a lot of those, and the BPOs are completely off the rails. They're coming left and right. New companies, people begging me to do BPOs, and I'd do them if I could keep up with them, but they don't pay enough to warrant me driving through the snow to get this thing going, but the amount of properties that are getting BPOs placed on them it's obnoxious, really. And
let's stop for a second.
Go ahead.
Let's explain to everybody what a BPO is.
Yeah, broker price opinion. Basically, when you're 2-3 months behind on your mortgage, they order a broker price opinion, a drive-by, which basically they hire an agent. A BPO mill is who they'll call. They'll hire an agent to go do a drive-by on the property, take about 6-7 pictures, a couple angles, front, house number, and they'll do a quick report on it. Is it vacant, occupied, and give them a couple of comps to give them an idea of what the value might be and if there's any repairs needed. So those are, and we've been talking about that for probably a year and a half, 2 years, that those have been fast and furious, but now I'm seeing it really quick coming down the pipe. I think I sent you a photo of I had 47 or 48 of those in like a couple hours, coming through. So, but what I'm finding too, the ones I'm taking, the BPOs I'm accepting, the exterior of these properties are in really rough shape. So and these people have no money. They're not able to take care of these properties at this point.
You had mentioned in a prior show that they were trying to get you inside the house to take pictures of the interior because, yes, we both know that when someone's not paying their mortgage and they've been through multiple workouts, they probably have a lot of them have very little hope of ever making good. It's just a matter of how long can they stay in the house
Right.
before being homeless or needing to find a place to go. So we know as brokers that the inside, because they know they're on a short cycle. I mean, short cycle, maybe 4 or 5 years, but they're getting to the point to where they're not spending money fixing things and haven't been because they know that it's coming. Are you still seeing where you're going inside at all to take photos, or is that gone?
No, I'm doing interior BPOs, and most of them are in pretty rough shape. Um, these people are just holding on for dear life. They just want to stay. Somehow can we stay? Make it happen. Please let us stay. And, whatever it takes to get them to stay, that's what they're going to do. Our government's more than happy to work with them. They really are, but I think I think the government's starting to get pressure now, like with the FHA. They had to do something different to show that, hey, we need to actually let the system do what it's supposed to do, you know, and the ones I go into are always rough, and these people are scared to death. They don't know where they're going to go if this doesn't work out, but this is probably another 6th, 7th, 8th workout for these people, so it's just, the system is just broken down at this point. The government is basically the subprime lender now. That's what it
So
comes down to.
you think now that the waterfall on FHA has sort of ended and they get one more workout before it then goes to, you can only get a workout every 2 years.
Correct.
And also you have to make 3 consecutive payments prior to that next workout 2 years after you do your final. This is the final workout.
Right.
Then it goes to every 2 years, and to qualify to have another workout 2 years from this final workout.
Right.
Now, then they have to make these 3 monthly payments in a row, or they don't qualify for it at all. Is that correct?
Yeah, that's correct. And I mean, I'll bet you a lot of these people will struggle. I mean, and you've kind of seen the workouts. I showed you a few of them, but these workouts, what we're finding is that there's no questions asked. It's like 4 or 5 months, no payments, bump it to the back, start over. 4 or 5, so now I think even making those 3 payments, they may be borrowing from mom and pa, or taking on an equity loan, or a credit line or whatever to get that done. I mean, I just think it's been so easy that a lot of these are just going to fall apart out of the gate because they've had it where they haven't had to have any skin in the game for 3-4 years.
All right, let's take a look, John, at something you sent me, and you can kind of explain it. What are we looking at here?
All right, so this is just a quick snapshot. I don't want to bring out like all these graphs and whatever, but it's like, if you just read across a top line, Aurora, Illinois, detached properties, not attached. Okay. And I'm trying to sort these as I research them so that I know, I can kind of get a barometer of what's worse, detached or attached. So Aurora, Illinois, big city. And I believe it's the second biggest city in Illinois. You see there are total FHA transactions from 20 to 23. And this is all information in the MLS that anybody can get to that has access to it. 455 total. There were total seriously delinquent, and I consider what the ones I basically that I will mail are the total. The seriously delinquent ones are the ones that have had at least three workouts and one in the last year. So meaning that they're kicking the can down the road. But there's so many more that have had 1 or 2 that are maybe have been cleared for a year or 2. So they're not, I kind of consider them caught up, but they've had a struggle at some point. Okay. And you can see the percentages. I had Aurora, I had Elgin in there, Elgin, Illinois, Yorkville, Illinois, and Plano. And this is just a quick sketch. I had some detached, I had some attached, which is townhomes, condos, whatever. And you can see when you total them out, the delinquency percentage, like Elgin detached, 20% delinquency, and the numbers that are out in the press, so to speak, are 11%, 11% delinquencies. No, it's not. I mean, if you average these out, it's 18%. Okay. And this is just these 4 little towns in Illinois. Okay. This isn't, and these are stable areas. You've got certain areas where these delinquencies, I'm sure, are pushing 30%. And again, this isn't including the onesie twosie workouts that are out there, because I don't consider those really, seriously delinquent. I'm going after the ones that are every 6 months they have a hiccup, but 18%, that's huge. That's huge for just these towns and the number of units there. You got what? 2,844 FHA loans. 18% of those are delinquent, seriously delinquent. Okay. And that's just in these 4 little towns. That's not even
And
all these other areas.
tell us how you're coming up with, how do you find what's delinquent? This video is brought to you by Sachs Realty.education. Many of the costly mistakes that people make when buying a house can be 100% avoided. To learn more, visit Sachs Realty.education and become an educated homebuyer today. Tell us how you're coming up with, how do you find what's delinquent?
What you do is, I'm sure it works in any MLS. I mean, I offered, let somebody try it or call me to try it, whatever. But you go and you search like 2020 Elgin single family close date Jan 1 to 2020 to January 1st or December 31st, 2020. Okay. And then you can go in there and you can put finance code, because when we close these in the MLS, when people buy them, we put in the finance code. So that's there. And then when you open up that finance code, it gives you all the title movement on that property since even after they closed on it. And you can see all these workouts, which we've gone over that a couple times in one of your shows, where you can see the workouts as they move along in the system, where they keep putting the $15,000, mortgage payments they haven't paid back on the back. Boom, 6 months goes by. Boom, then they get a 40-year mortgage from FHA at 6.5%. And that's what's fun. What's really sad is that these people are refinancing. They're refinancing into a 40-year loan with a higher rate than what they had when they bought it. So, I mean, it's just all just moving this big blob down the street, but this information, to answer your question, it's all in the MLS, easily accessible,
Do you think this, if we went into all of the markets, major markets, especially the ones that have had the biggest price gains, I mean, do you think this would be consistent? I mean, are you following?
Absolutely.
Yeah.
Absolutely. Yeah. This is, I know that's probably an average number, because these are, 4 different towns and they're different demographics, but and there's going to be areas. That's why I'm saying there's going to be areas that are probably 30%. And then there's going to be areas that might be 12, but that 18 is probably a pretty solid number for almost anywhere you go, just because that's averaged out with 4 different towns, different schools, different whatever. I mean, stores, whatever, close to expressways. It's all kind of factored into that. And that's an average number for that.
And you went, and just to sort of confirm that, you just got back not that long ago from a 5-star event that was basically distressed asset, managers, and you had FHA there, maybe. Who all was there? Fannie? HUD.
Which is FHA VA.
Right. So, and they were talking, and the tone of that recent trip that you went on with 5-star, what was the general tone and the talk about preparing for the next year to come with dealing with these delinquencies and foreclosures?
Well, they didn't really, there's really no path forward. Nobody's going to give you that in a meeting like that. And I think I told you, I had asked the question, like, how are they going to deal with this once they lift the guardrails? And the representative from HUD said, I told her, I said, you're already at 11% delinquencies, according to the
nationwide
general population. Right. And she said, oh no, it's about 4. And I'm like, well, I mean, my chart there, those are facts. Those are, that's like on the street information, I mean, this isn't a news clipping, this isn't something I got out of CNN or CNBC, but basically they said that the more, I think they said the mortgages written from 2022 to 2024 are going to be the cascading problem in 2026.
Well, I'm going to show here in a little bit. I'm going to show a website, which is an auction website, and properties have the amount of properties in states across the country have really increased significantly. I mean, we're talking about foreclosures, bank-owned properties, where we're really starting to see them going into foreclosure sale or being auctioned off if the bank owns the property. I'm going to show that. And then we're going to look at some other data stats as well. How long it takes to get the occupants out of the house once they've been foreclosed on, or if it's an occupied status, when somebody buys this auction property. And this is just one site we're going to look at. But we'll also talk about how long it takes in each state on average to get the people out of the house. They become, I don't know, the way it is here in Maryland, and maybe it's the same way in Illinois, John, but what happens is when a house is foreclosed on or sold at auction with an occupant, in most cases, if it's the owner or the borrower that was foreclosed on and the house was sold at auction, at that point they become what's called an unlawful detainer. They're there illegally. Some people may say, "Hey, I have a fake lease. Here's my lease. I'm allowed to be here." And of course, in any state, as far as I'm aware, a lease survives everything: sale, death of a landlord, anything. The lease terms are upheld by the new buyer. But what happens is when somebody makes up a lease, it becomes almost like this domestic dispute or this civil dispute,
right? Civil
where
problem.
You have to go through the if they pay, maybe they're a fake lease or what. I mean, there's a process that may even be harder to get the people out.
Absolutely, yeah.
But when they have nothing, they've lost it because they haven't paid their mortgage. The bank foreclosed on them. Somebody else bought it, or at this foreclosure auction, they're not a tenant. They become in the state of unlawful detainer, and that process is typically a little bit faster, from my experience, than throwing out a tenant that has a valid lease and that hasn't paid their rent. Do you find that to be what I'm saying to be accurate?
Yeah, I mean, the leases, a lot, and there's a lot of bogus ones. I mean, I've run through that many times where they're like, "Well, I got a lease," and they weren't there last week, and the property was vacant before that. But yeah, I mean, the leases, that's when you get into tenants, they're going to, and especially with most of these properties, government-backed loans, they're going to bend over backwards for them. They'll keep them. And I've had too many of those in the last couple of years where tenants are in them, and there's problems, and they don't pay the water bills and the sewer bills. And they literally send them to us to pay for tenants in the property, for us to pay. And they authorize us to pay them. It's like, and these are $500, $600, $700 bills, and then
you pay them. When do you get paid back?
Well, the bank pays us back, but it's like, what are we doing here?
How long does it take to get paid back?
30 days. I mean, it used to be really bad back when the crash of 08, but, yeah, but it's like, what are we doing here? What is the point of that?
Let's talk about fraud. You said that you were dealing with a fraud case directly head on. I mean, you're in the discussion about the case,
right?
And FHA, is that what it is? FHA?
No, it'd be a Fannie. It'd be a government Fannie. Yeah.
So it's a conventional owner occupied loan or mortgage that was taken out. So what's happening?
So the list of the property, owner occupant only, first 30 days. Okay. And that's what all of them, FHA.
Were you the listing agent?
I was the listing agent. Buyer came in with his agent, bought the property, owner occupant. And I showed you that owner occupant cert showing you're going to live in it. Sign it. Boom.
I'm familiar with
it. Yeah.
Yes.
Buyer buys it, close on it. See ya. Your house now. It couldn't have been 2 months later, 3 months later, the property's back on the market, rehabbed, new stuff, new garage, new everything. And somehow, and I don't know how, but somehow, they caught up to him, and it was, hey, you said you were going to occupy this, and, there's paperwork out there showing that, but it's like, yeah, there's basically a $10,000 fine if you don't occupy it for, I think it was a year. after you
12
bought it.
months. Yep.
Yeah. So it's, I mean, and that's one of the reasons why, they do that so they can compete with the owner occupant. So he's an investor and he goes in, sign, and those owner occupants, I give him credit for tracking that down because most of that government backed paperwork just gets obliterated into a shredder. And, there's really nothing. I give him credit for following that through because that's another reason why we don't, the inventory is so hard and people have so many problems trying to buy something, so that property was lost out to what could have been a regular buyer could have owned that property. But instead, he lost out to an investor without even knowing it.
What John's talking about is if you go to HUDHomestore.gov. So if you look at the properties here, you can see where it says listing period extended. Basically, what happens is owner occupants are protected when you're shopping on this government site. Government-owned properties, foreclosures, a lot of them are foreclosures for 30 days. So for the first 30 days, it's reserved for owner occupants, if it's nonprofits and government agencies. Can't forget them. So they get to bid on this property first. So what John's talking about is an investor lied and said, I'm going to live in it. Now, you don't have to sign just one affidavit. I think it's several affidavits, maybe 5.
Yeah.
In a total process of saying that you're going to live in this property, you're buying it as an owner occupant, you're taking this off the market. And this investor said yes, and then they caught him because they were turning around and flipping the property 2 months later back on the market. There was a $10,000 fine, but John, there was also something in there that talked about potential criminal implications and turning it over to law enforcement authorities if they did not produce this $10,000 fine, is the way I understood it. Is that
right? Yeah, I mean, it's I'm glad that they're hell bent to try to stop that because that's one of the other problems. And I know a lot of the FHA loans, a lot of those are fraud. A lot of people bought those for Airbnbs. There's a ton of that out there. I mean, I've seen snippets of stuff all over the place. And, and that's why FHA, I mean, look how many more loans are FHA from even back in the crash, And I'm glad that they put some teeth into that and actually went after one. That's a good move. But, it's hard. It's hard to police that,
Let's go ahead and take a look at that website that I was talking about. So this is Xome, Xome auction site. You guys can check it out. You can actually go in. You can select bank-owned, second chance foreclosure, short sale, foreclosed homes, and non-bank owned. John, you want to just give a sort of like a quick synopsis of each one of these things? The difference, bank owned, second chance, and so forth.
Yeah, well, bank owned is obviously the bank took it at auction. It's theirs now. It's now an REO, real estate owned. That's considered. Second chance foreclosure. That's probably in that pre-foreclosure mode. I'm not even aware of second chance foreclosure, but that's most likely pre-foreclosure where there's a lis pendens and he's getting bounced around in the court, and and there's still a chance to kind of pull that out of the jaws of defeat. Short sale is when you basically just I owe more than it's worth on my house, so I'm going to list it and sell it and hope that the bank will take a shortage on it. Foreclosed homes, that's really more like bank owned. And then non-bank owned, I'm guessing is just retail real estate at that point.
Yes.
But yeah, I mean, they're that's one thing too I'm seeing is they the banks like Fannie, Freddie, and they'd almost rather sell them occupied to somebody because they just don't want to deal with the blood on their hands for having to foreclose on these. They don't want to do it. And to me, to help people out trying to buy and sell, and they come up with all these gadgets. I mean, it's like I can't listen to another 50-year mortgage plan. It's like, what are we doing here? But they really need to just let these go the system, but nobody wants to do that. And back in 2008, that's why you didn't have the government involved in all these mortgages. You had private banks that were foreclosing on these properties. There was no
Yeah.
bailout, not till way later. So the properties just went through the system. Hell, you didn't pay, we're foreclosing, boom, you move along. And these properties could be paint, carpeted, and resold to people who are looking to buy a home. And that's part of the problem why these values are so incredibly high and just out of whack.
Yeah, so pulling up this Zone website, you can go to the map here, and you guys can do this at home. And you can see where all of these numbers are all of the auctions that are on the site. It's either an active auction that will be ending soon. They tell you how long you have to bid, or will tell you when it's getting ready to kick off. A lot of times it'll have like a reserve, the least amount of money that they'll accept for the house. One thing I want you to know, if you're going to buy a house on a website like this, regardless of whether it's foreclosed or not, bank owned or just somebody deciding to list their home on Zome, is that and it says it right in it, that and a lot of platforms are like this, the machine will bid competitively against you. A lot of people are like, they go on, they place an offer, it says 100,000, they'll put in 101,000, and then instantly they're outbid. You get an alert that says you've been outbid. The machine will bid against you until the reserve is met. So you think it's somebody, sitting in their house bidding too, and it's not.
Right.
So just be mindful of that. I always tell people the best time to hit this thing, mark your calendar for when the auction ends, and then just wait until a half an hour before or 15 minutes before. And then what happens is, as it's getting overbid, even when the auction's closing, it keeps pushing the time out to give people. They're very good at getting the most amount of money as they can.
Definitely.
Yeah. And sometimes it doesn't hit reserve no matter what happens, and you don't get it. They re-auction it off,
right,
or they do something else.
I've seen them do multiple auctions on those, multiples. And you're like, that price makes sense. And they just go, nope, we're going to re-auction it again. And I think that's most of the time. Most of these don't get done until they get the price. And what they're hoping for is somebody sitting around who doesn't know what they're doing, which there's a ton of agents and slash buyers out there right now that are doing that are just, oh man, this makes sense. I've had guys call me on rehab properties I have listed from California, and they're like, hey, what do you think it'll sell? I'm going to put a bid in. They bid on it and they buy it. And it's like, okay, like no due diligence there, and I don't know. Yeah, that whole auction thing is kind of a crazy world.
I want to just show people. So I just put in second chance auctions, and I selected Maryland. So we'll take a look at something here. So here, taking a look at this, we've got, we can look at the current bid is $311,000, and looks like a nice house. Has exterior photos only. This is like something that John does, goes by and takes a lot of exterior photos, provides that to the bank. 23 hours, 48 minutes and counting left to bid. And you can see here it says the reserve is not met. Yeah. All right. However, the seller will review all the highest bids. So if it doesn't ever hit, they may take the bid amount that was the highest bidder. They may, like John said, it just goes right back into another auction to try it again. But what I want to look at here is this. It says occupied, right? Status. So they have a good idea that somebody, probably the homeowner, is living in this house. And this is very risky because it's unlawful for anybody to go on that property. Mm-hmm. So what happens is you have to take the property at auction, and then you have to go through the eviction process. And what I wanted to show you here is that there is a site on Zome. They will do the complete eviction process for you. If you buy the house on Zome, and you find it to be occupied, you can hire these folks. They will try and first do cash for keys, which is a process where they'll bang on the door, say, hey, somebody bought your house at auction. They're willing to give you $25,000 to get out. And that sometimes is or isn't successful. You say, whoa, $25,000, that seems like a lot of money. Well, that might be cheap.
Yeah, you never
I
know.
mean, number one, you may prevent them from destroying the inside of the house. Hey, look, in order to do this, it's got to be in decent condition. We got to walk through the house. We need to take a look at it and make sure you haven't destroyed the house.
Right.
But if you don't do that, offer cash for keys, and sometimes that doesn't work. I've seen it where it's gone both ways. They're like grateful. Oh my gosh, yes, we're so sorry, that this is happening, but we couldn't afford to pay. Other times they take a wrecking ball to the inside and do everything they can and poison the well. I
Yeah.
mean, they can do whatever.
Definitely.
Yeah, at this point. But anyway, what I wanted to show you here is the average estimated days it takes once the foreclosure happens, the sale happens, by state. And I'll drop all these links in the show notes below. You guys can click away and have fun at it. Maybe you will. Maybe somebody watching decides that they're going to buy a house at auction or give it a shot. But this is the estimated days per state it takes to kick the people out. And interestingly enough, as we're looking through here, Illinois, 60 to 90 days. Do you agree with that?
No, 190. I see 190 over there.
No. 190 is Rhode Island.
Oh, gotcha. Okay. Yeah. 60 to 90. No, it's 90 plus. Minimum 90. Minimum.
Okay. So it may be higher than what you're seeing here. And it could be because they say that in here that it could take longer, but this is the estimated days that they have. But interestingly enough, I want you all to pay attention here as I'm scrolling down. Here we go. Oh, whoa. Maryland, 120 to 180 days. That's where we are. Gosh, the only one that I see higher than that is Mississippi.
That seems odd that would be that high.
No, it's not.
I don't know.
It's not odd at all. Look, I can tell you that. 90 to 120 days in New York. It takes an average of 7 months to evict somebody in Baltimore City. I've done it. I mean, I'm telling you, it's not easy. I've had properties down there when I landlorded in residential properties, and it's taken me 4 months to get tenants out of commercial properties here in Maryland. 4 months. Commercial. Now they say commercial is just like residential pre or post 2020.
You almost have to pay them to get out. I mean, that's really your best, and all the times I've been doing this and doing evictions, and it's like, no, take it easy on them. Man, these are good people. We know they're good people, but there's a system to this that makes sense. That's been around for a long time.
I've said it before, but I know firsthand, whereas it took 10 years to foreclose on a property, and then after the property was foreclosed on, they gave them cash for keys, like $25,000 to get out.
Right.
And it took 10 years to foreclose. And the reason, and this is going back to the GFC, the reason was because Countrywide they went bust.
Right.
And when they were taken over by Bank of America, I'm pretty sure it was, if my memory serves me correctly, they couldn't find, in order to foreclose, you had to actually have the documents.
Right.
The original note in order to foreclose, and they couldn't find it. It was in boxes somewhere or whatever.
Right. Yeah. I had a couple of those that were like 7-8 years that they were in them, and they were laughing all the way to the bank. They're like, yeah, I'm not going anywhere. They told me, like, hey, okay, it's whatever. If you can pull it off, man, do it.
We had a mortgage tech guy. Maybe you saw the video, the show, John Komisky.
Oh yeah.
Did you see that?
Yeah, I saw it.
And he said there's only 2 ways to get evicted on, or to be foreclosed on, at least in the last 5 years. One was to move out,
right, abandon the
completely
property.
Vacate, or stop communicating with your loan servicer.
And it's still it's true now, basically.
Other than that, you couldn't. Yeah, you didn't get it. You didn't get thrown out.
No.
I want to look at a couple of things that you had sent me and get your comments on them. Here is something from NAR.Realtor. NAR forecast home sales expected to jump 14% in 2026. Mortgage rates are expected to ease to roughly 6% next year. What did you want to say about
I
this?
don't just the cheerleading from the NAR is incredible. I mean, 14, what was it? 14%? It's going to
Yeah.
go up. It's like
Yep.
based on what? I mean, that's not boots on the ground, forecasting. Lawrence Yun, I don't know the guy, but too much of this cheerleading. And I sent you the other one too, the other NAR cheerleading. It's like anything to keep you dialed in. Like, hey, and you're in the business. I have clients and family, and Thanksgiving just passed, and people are like, hey, I've heard that the rates are going to be down at. Where'd you hear that? On some show. It's like, this is where they get a lot of this crap. And people, then they feel like, oh my God, I have to motivate now and go find a house because, something may happen that the NAR said may happen. It's like, oh, yeah, it's like, it doesn't make any sense. It's like anything to keep the hot air in the bubble, keep it moving. And here's the National Association of Realtors fanning the flames. Literally. That's reckless to come out with that and say that. We expect it to go up because that's going to promote these people to go, oh my God, I better go hurry up and go out and buy something. No, this is treacherous right now at best,
Did you see my interview with Lawrence Yun?
When did you do
Have you
that?
seen? Oh, geez. I'm going to say we did it in 2022.
I
think it
probably
was.
just came on the scene with you, Beck. That was probably around the time I have to go look.
Yeah, you'll have to watch it. And, it was interesting because, we were talking about a lot of the things that are happening right now that we're seeing happening. I mean, look, there's no question about it. You can get all the people in the world that are saying that we're wrong in saying and predicting that house prices are declining, but the writing is on the wall. Now, I'm not saying that they won't do something to reverse it, but if you have to sell your house right now, you were selling it for less than what you could have sold it for not that long ago. It was quite a great show. And I have respect for these people. I don't want to say I'm very much in support of an industry pros, professionals. I mean, NAR, you can give them a hard time. You can find fault with any organization that's out there. But I mean, really, I truly believe that buyers and sellers in the hands of good realtors are in a much better position. And write that down because you may not expect me to say that, but I've said it even in my course. You are in a better position with a professional, a real estate professional, a realtor that really does care about what they do and has a proven track record and will put the client in front of their own needs. I'm not saying that is prevalent necessarily.
It's not prevalent.
But it is important. And I do believe that. And that's why most people should be interviewing their agents. But I respect Lawrence Yun. And I was very honored that he came on and gave me the opportunity of that interview. I don't agree with everything that he said. And it shows in that interview. Yeah. I pushed back. And so did he, quite honestly.
Look at the other one, the other NAR thing that I sent you.
There we go. Declining mortgage rates helped housing remain affordable instead.
Affordable. I mean, what? I mean, you have to read that like 4 times. Like, what are you talking about? It's not affordable. Right. I mean, if you want to consider it affordable from last week, it's like, and there's just so much BS out there, and and a lot of these agents. I had an offer.
Well, here's the chart. This proves it.
Oh, my God. Unbelievable.
Housing Affordability Index. So, by the way, just so everybody knows, it's just become affordable. And you know what, though? Look, you and I both know we've got a long way to go to get to affordable across.
Absolutely.
If and what this means, HAI or Housing Affordability Index basically means that at this line, the 100 line, that means that a median income household whether it's one person or 18, whatever, median income household can afford a median priced home. In other words, with what you make per year, you should be able to afford a house. It's still questionable whether nationwide it's 104. That means it's over that threshold.
Right.
In 2006, the peak prior to the GFC, we did not go below the 100 line. So even in 2006, with that current bubble, you want to know if we're in a bubble? Right here's the proof.
Right.
In this NAR chart.
Right.
Maybe that it's deflating, but back in 2006, in that bubble, which was the highest bubble post World War II, it still didn't breach beneath the 100 mark, where a median household income could buy a median priced home. Now, look very carefully. It did drop below that several times, really since 2020, arguably 2022.
Yeah.
But now we're back. Now things are affordable due to those great mortgage rates. And by the way, the mortgage rates really aren't bad historically, considering 7.77 has been the running average over the last 5 decades.
Yeah. Did you look at the numbers if you did a 50-year loan for just if you stayed there for 10 years?
Sign me up.
Yeah. I mean, you're better off renting. Let the landlord, and you still got to pay the house, the roof, the windows, the furnace, right, the whole deal. Yes. I mean, it's like, I mean, then we're going to have portable mortgages, and all they're trying to, they know that they just don't want the values to drop. So they got to keep pumping whatever they can get to keep people buying this stuff. You know, that's what I mean. It's like, you know, people are like, oh, back in the 80s, I had a 10% mortgage. It's like, yeah, but the house is 120, you know, so it was
or less,
no problem,
70
or less, right?
60.
So yeah, it's just insane, man. It really is. It's, you know, I don't know where this goes, but they're not going to be able to sustain this. They're just not. I mean, they're the only reason they're lowering the Fed rate is because they can't pay their own debt, you know, because the interest is so bad. But the inflation is going to keep going up. Then what? You know,
John, it's interesting what you said. Back in the 70s, when we had and early 80s, when we had those higher mortgage rates that peaked out in the high teens, a lot of households only had one income producer.
Yep.
You know, you didn't have one having 2 and 3 jobs now and 2 incomes, and now multiple incomes. I know a lot of people that have moved mom and dad in because they have a Social Security check that comes every single month, and they're using that income to live.
Right.
You know, hey, look, just, you know, this is kind of one of those things where it sounds good and looks good, but it's probably wherever that sampling of data and the prices are coming down. So, right. I mean, at some point, we probably will see.
But you're going to get a point where there's going to be a cascading effect. And I don't know what, and everyone's like, oh, you know, when I tell them, hey, it's next year, look out. And they're like, oh, so real estate prices are going to crash? No, but there's going to be all these gears without oil are going to start grinding, and it's going to start falling apart. And the problem is you don't know which element of it is going to set it off. You know, the inflate, you know, people are, you know, all this. I think I just saw something where Black Monday or whatever it is, you know, the big shopping day, like buy now, pay later was like 30% of it. It's like, so basically no one really used legitimate money to buy any of this stuff. It's all just more funded thing, and car loans are, you know, all this is it's just getting muddier and muddier. And some trucking company that handles all of United Parcels or the Postal Service, all their big shipments, they just went out of business this morning, you know. And it's like, I mean, there's just all these gears that are without any oil that are just going to start falling apart, and it's overheating. And, you know, and I know we look like fools. We're like, yeah, it's coming apart. And it's like, but they magically keep it going, keep the hot air in, 50-year mortgage, you know, portable mortgages, all this BS. It's like, It's no, it's not happening. You're gonna run out of the rabbits to pull out of your hat to keep this thing going, and it's just it's coming to an end. I'm telling you. I've been telling people, and people are like, I'm betting you on that. It's middle of next year to late next year. It'll be front page news that this thing's going to be so messy. But
Well, the issue is really the people that purchased homes in the last 4 or 5 years.
right,
That's really the vintage that is probably going to could be the most troubled here, because as we see prices soften, or even if they went sideways for a period of time, it could be a decade. It was, if the peak of 2006, it wasn't until 2022 until a lot of those people were above
right,
water.
yep,
They bought in 2006. Yes, it went down. It came back up. But if they had to maintain and replace roofs and do all these things, they were underwater. They didn't gain great appreciation.
right,
Up until 2022, they were just getting out from underneath of it in a lot of markets across the country,
yep,
especially the luxury markets. Where the people really made out were those, lower priced houses,
right,
200, 250 range that became $400,000 and $500,000 houses. They made out pretty well. But if you bought at that high point in 2021, 2022, and you want to move, you may not be able to move without putting a lot of money down
right,
and paying your underwater mortgage. And this is just facts. This isn't, we're seeing it. I mean,
right.
we're seeing it.
Hey,
People have bought in 23 want to sell.
The taxes and the HOA fees they're killing these people that bought townhomes. We've got a subdivision out in Yorkville called Raintree, and the literally they bought them and paid whatever 260 for them, a townhome. The taxes, it's like, oh, it's going to be 2.5%. Well, they're selling them now. They're starting to sell them off because the taxes are $9,000 and $10,000 for something that you're a new. Like it's 290 for a townhome, and there's a special service area, an SSA, and an HOA. So it's like, I mean, it's just, how do you survive that? There's just, you're being eaten alive by fees just to own this thing, which you don't even own. It's a condo, townhouse type deal,
John, what do you tell people that are in their home right now? Maybe they're struggling paying. They know that the end is coming near. Maybe they got another 6 or 7 months before they might be foreclosed on. Reach out to an agent and try and sell their house. What do you tell these people?
Well, yeah, I mean, if you're struggling to pay it now, it's not going to get better. I mean, I had somebody call me. I mail postcards to all these BPOs saying, hey, if you're in trouble, give me a call. And I had a woman call me, and she goes, yeah, well, what can you do for me? I go, well, help you get out of there and get some equity, save some of your equity. And she's like, well, I don't want to move. I'm like, well, then go back to your servicer. And she's like, well, they're not working with me anymore. It's like, okay, well then what is your other, there are no other options there. You want to maybe rent it. You're behind already. I mean, rent it and move where you get what you can, get the meat off the bones and get the hell out of there, and that's kind of the environment we've created, is that, well, you don't have to move. We'll work this out. You can stay there and not pay. And, and that's the environment we've created. That's why when we go to evict people, they're like, this is BS. They've haven't paid in 7 years, it's like, we've created this monster, but it's going to come down. I don't care how it does it. You're going to have one of these cycles are going to fall apart hard, and it's going to affect all the rest of it. Okay. What it is, I don't know. I'm just telling you, it's coming, because you can't maintain this, the inflation, all the stuff the government's trying to do to keep this alive. There's no money left, period. But anyways, to answer your question, it's like, yeah, you just, you got to look at their situation. If maybe they can get money from a relative and catch up the $6,000 they owe, great, and then you're back on track. You're still working, but most of these, they're not even working, and they're trying to stay in it. It's like, you don't have any options. Yeah.
Well, John, we certainly appreciate you keeping us updated on what you're seeing, and who knows? I mean, will we see a big collapse in delinquent inventory? Will we see where the government steps in with a debt jubilee or some kind of final workout upon the final workout.
Right.
I don't think anybody, I think it's closer that we get to midterm elections. I don't think that anyone wants to see, or maybe some do, but I think that the current administration wants to see where we kind of get things moving in a positive direction over the next, 4 to 6 months, maybe.
Yep.
But we'll see what happens. I hope that we can find a way to improve the conditions. But as we see, things are slowing down even more.
Right.
So.
Right. It's all, I mean, that's the problem now is real estate's kind of a political animal now. It really is. You know, you got to keep it going. Otherwise we'll look bad, you know?
Yep, exactly.
So all
right, my friend.
All right, man. Well, good to see you.
Appreciate you. Talk to you soon.
You bet. Take care.
Thanks so much for watching. If you like the video, you can let us know by smashing that thumbs up. And if you haven't already subscribed to our channel, please consider doing so now. Hit that alert bell. You'll know every time we upload content just like this. Keep those comments and questions coming. And one of the biggest compliments you can do for us all here at Sachs Realty is to share our channel and this video with your family and friends. This will help us to continue to build this amazing online community with viewers just like yourself. See you next time. Sachs Realty, Maryland broker number 607720, office number 443-318-4514, equal housing opportunity.